Hello and welcome to Business Incorporated live on Channels Television. It's another trading day right here in the that's Nigeria's commercial nerve center, and trading is on full swing right now. Here's what's coming up in the next 55 minutes. Kenya's public debt rises by 229 billion shillings in 2024-2025 financial year as KRA misses its revenue target. And Zimbabwe plans to boost oil pipeline capacity by 5 billion liters annually. Plus, cocoa prices under pressure due to increased cocoa supplies from top producers. It's good to have you join us. I'm Lade Williams. Let's get a quick check on the commodity markets. Now, we're seeing gold prices slipping in early trade today as the U.S. dollar has strengthened, while investors are assessing a flurry of economic data showing stalled inflation progress, suggesting the Federal Reserve might tread cautiously on further interest rate hikes. It's all about interest rates. How's the U.S. Fed going to move forward with that? Palladium price down to about $972 on change. And spot gold, we see that at $2,627 per ounce, down about 0.3%. And we have spot silver down a big 1%. Losing that $30 psychological level for price there, $29.78 per ounce. So we're seeing weakness right there in the metals market. To the oil market now, we're seeing oil prices kind of up this afternoon. In contrast to what we had earlier today, 0.87% jump for Brent. Crude $73.44 a barrel, while U.S. WTI crude, that's $69, trying to get back above that $70 level, up about 0.73%. So we're seeing a bounce there. Maybe that might continue into the final trade for Friday. That's tomorrow. And maybe that might flip the oil market into positive territory. That's for the week. So we know oil prices did drift lower yesterday, but we're seeing a rebound there with U.S. gasoline inventories. And investors also focusing on OPEC Plus meeting that's coming up over the weekend to discuss oil output policy, and we know how all of that brings for volatility right there for oil prices. And the House of Representatives has resolved to summon the governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, and the chief executive officers of commercial banks to appear before it and propose solutions to the challenges posed by lack of documentation. That's for point of sale users across the country. The resolution of the House followed the consideration and adoption of a motion sponsored by a member of the House, John Okafor, during the Wednesday plenary. He explained that cases of fraudulent activities within the financial system have been established against POS users, adding that there's urgent need to combat such illicit practices and safeguard the integrity of financial transactions within Nigeria. In support of the motion, the Speaker of the House of Representatives, Tajuddin Abbas, mandated the House committees to digital and electronic banking, finance and banking regulations, and financial crimes to invite the CBN governor as well as the CEOs of other financial institutions utilizing POS services to appear before them. I will see more than 550,000 investors have abandoned their dividends in 9 blue chip firms, and that's due to erosion of their value, raising concerns about the efficiency of the electronic dividend program. This comes almost a decade into the E-dividend payment regime, which is hailed a game changer in dividend payment. And when that was rolled out, everyone expected that at some point people will be able to get most of their dividends, but that's not playing out at this time. So it's all about how to make the process seamless going forward. And to other matters now, the Minister of Women Affairs, Iman Sulaiman Ibrahim, believes that investing in gender programs is a strategic catalyst for economic growth. She said this at a high-level dialogue on investment in gender equality and ending violence against women and for women's rights and development. Do take a listen.
Stakeholders, policymakers, and advocates gathered at the African Development Bank office in Abuja for this high-level dialogue designed to address systemic barriers affecting gender equality in Nigeria. The UN Women, in partnership with the African Development Bank, is organizing this meeting to deepen the understanding of how gender-based violence impacts individuals, society, and economic development, as well as advancing gender rights.
I would like to highlight that the World Economic Forum estimated in its Global Gender Gap report of 2022 that it will take about 132 years for the world to achieve gender parity.
Our focus on gender equality and enabling and ending violence against women for rights and development is very, very important and timely. This is why the African Development Bank has a very, very clear stance on this issue.
The dialogue leads to the launch of a new high-level technical working group dedicated to implementing gender-responsive budgeting, policy development, and institutional frameworks.
On the side of the European Union, gender equality and women's rights are a top priority, both internally, back home, as well in our international cooperation and development policies.
Some states, particularly Kwara, have adopted the 35% Affirmation Act, meaning that it's law now to make sure that we have 35% of women in leadership positions. And we continue to fight and walk the talk.
The Minister of Women Affairs delivered the keynote address. She notes that gender-based violence costs the global economy over $1.5 trillion annually, emphasizing the impact on the nation's economy.
Women in Nigeria make up 49 to 50% of the population. 41% of micro, small and medium-scale enterprise owners are women. Yet, less than 22% of women hold senior leadership positions, and only 3.6% occupy parliamentary seats, elective offices. This gross underrepresentation in decision-making stifles growth, innovation, and inclusivity.
The dialogue continues with a call for collective action and accountability to drive the implementation of gender-responsive initiatives that would foster sustainable development and address gender inequalities across Nigeria.
Welcome back. Well, now let's explore the achievements at COP29, focusing on climate financing strategies and the pivotal role of strategic partnerships in advancing sustainability goals, and how are the global collaborations shaping the future of environmental efforts. Well, join us for this conversation. We have Mrs. Titilayo Oshodi, Special Advisor, Climate Change and Circular Economy, Lagos State, and Dr. Adebola Odunsi, the CEO, Carbonicity, and they're both joining me right here in the studio. It's great to have you both.
Thank you. Thank you so much for having me.
Thank you for having us.
I know you both were at COP, I believe. And how's the weather at COP?
Oh, it's getting chilly right now.
Okay.
I think Baku is sort of like tending straight away from Europe, but it's right in the middle. Middle East, and it's just beginning to get nippy, but because Baku is a vast mass of land with a very small population, you get to have those winds blowing at you, and
so I guess it wasn't bad.
No, it was bearable. It was bearable.
Nice weather.
Wasn't.
All right, so I can imagine most of the deals that played out right there, and we've also had conversations that most of the developed countries are not the kind of feet dragging when it comes to investment. For vulnerable countries that did not contribute much to all the issues we have right now with carbon emissions. So talk to me, do you think Africa should change the mentality at this point and say, you know what, we need to finance our way out, at this point? Let me start with you.
I mean, I like the way you have positioned that question. It's time for us to start being very inclusive, being very introspective in our approach towards finance and economic empowerment. This is because we have, what it takes. We're endowed, first and foremost, with the mineral resources that are required for those alternative options that the developed countries and the global north require. for them to be able to transition into a green economy. And we have numbers, where our population is enough human resource for us to be able to build capital, and develop our economic spectrum. So, yes, we definitely have what it takes. And I think that's one of the things that we preach within the principles of circular economy, because it's essentially how do you start to optimize the mineral resources that we are naturally endowed with, and how can we use them to unlock opportunities for jobs and for businesses who play in that space to be able to operationalize, build, and expand their operations through scaling and diversifying. So I think that it's time. The conversations are building up. I think at the point where there was a frustrating comment, at the negotiations, it just may be that light bulb moment that we need for us to be able to say,
those negotiations seem quite heated.
It was heated, yes. Yes, it was. As it should be.
Yes, and Dr. Odunsi, definitely looking at it from carbon emissions and carbon trading, at this point. So talk to me about where we are, as Lagos State, when it comes to that.
As with everything African, we are a potential powerhouse. And I use that word potential because most times, we find ourselves contending with that word. And we need to essentially, transition into being that powerhouse as opposed to be that perceived powerhouse. So I will try to keep it as lay as possible. But Nigeria in particular is sitting on a wealth of opportunities within the carbon trading space, particularly as regards the compliance carbon markets. A lot of the efforts today are still circulating in and around the voluntary markets, which, yes, whilst there's some rewards, but we believe that the direction of application, especially for the wealth of resources that we have, when we look at just the sheer population size that Mrs. Oshodi alluded to, waste in itself is a resource. It's we like to say waste is a perception. It's only in the mindset of people. You can translate that waste into just about anything today, and realistically waste to tuition, waste to health insurance, waste to social subsidies, and when you look at the potential, the sheer potential in the land mass and in the per capita of Nigeria, if waste is what is helping people get to work, pay their transport bills, pay their electricity bills, you can imagine the sort of succor that it can bring, and translating into higher falutin projects and opportunities, maybe in the gas flare down space, which is where Nigeria's biggest commitments in the nationally determined contributions lie. There are a wealth of opportunities in the trading markets. Methane is a diamond in the carbon markets, for instance, and Nigeria is heavily rich in that methane. I must say that gas being approved as the transition fuel of choice for the global south, coming out of COP28, portends a very good development for the country if we can, step away from the commerce of it and also look at the carbon trading potential within it.
Right. I guess at some point we might have to change the name waste.
Yes.
Absolutely.
And call it something else.
Absolutely.
At this point. All right. So let's look at some of the outcomes from COP29. I know Lagos State did have a partnership with the EU Africa Chamber of Commerce. Tell us more about that.
So, it's very important that we lay bare right now that one of the key areas for the vision of the governor is for us to be able to position Lagos as a hub for green finance and for circular economy innovations. And that's the way that the EU Africa Chamber of Commerce have been able to plug into what we have. So what we want to do is establish technology transfer, improve the trajectory and the knowledge about climate financing, and also help our businesses to be able to build in terms of data, research, and the infrastructure that is needed for us to be able to proliferate the market from a circular economy perspective. And like I was saying earlier on, that we were very strategic about what we wanted to do about our objective when we were going to COP29, because we'd already curried and started to lobby the development sector, even our local development partners. We have financial institutions. Access Bank had bought into that vision, and they were partners that journeyed with us into COP29. And, it's very, very important that they have become our partner on, getting into that circularity trajectory for Lagos and by extension in Nigeria. And of course, Carbonivity, our assets carbon managers, were also on the ground when we played out all of the initiatives that we have started to pilot, so that people can begin to see firsthand the simulation of how you can begin to transform your waste in every sector: textile, plastic, used cooking oil, electronic waste, in exchange for social subsidies or for cash or for, there's so many renditions and ways that we're beginning to trade waste right now. And Carbonivity was there because we need to start to capture, there's the commerce aspect of it, but there's also the regenerative finance aspect of it, where you begin to capture data that you use as a report to play in the carbon market.
Because, talking about the circular economy at this point, I have one electronic that's giving me stress at this point. I think one of my ACs, and I want to get rid of it at some point. And I'm sure the viewers will be wondering, how do I profit from that, in the circular economy, really, in Lagos State?
So there are quite a number of programs that we have started to run, but if I needed to answer that question directly, I would say that there are recovery material enterprises that are existential within the landscape of Lagos right now. And we call them material recovery because they're just recyclers or people who collect waste and they trade them in exchange for whatever it is that you want. We have been able to bring that to bear by establishing a program called EcoCirculate, and it's essentially a waste valorization market, where you can actually bring anything that is regarded as not necessary or not required or what you have no use for, but we're bringing that in the space of EcoCirculate to say that there are people who want that in exchange, and you can desire to have whatever it is. And through that ecosystem, we have had intersectoral and multisectoral interplay, partnerships. So we've partnered with the Ministry of Transport, partnered with the Ministry of Agriculture, partnered with the Ministry of Health, so that social subsidies or social amenities, can actually be accessed in exchange for that. There are also various programs that we've also started to build up on, like we understand what our nuance and our culture is and our tradition. That we're very, very spirit-led people. So we have begun to, build conversations with faith-based organizations so that we can use them as a channel to drive climate education, to train people, to train our young ones to be able to understand the process of circular economy and the commerce of it. And we can also begin to test businesses to connect with societies and communities, vulnerable communities that are willing to give waste, and they can have whatever it is that they want in exchange. There's one that we're particularly working on right now, and it is waste to tuition fees, waste to school to tuition fees and school uniforms, for a vulnerable community that is waterlogged, around Ajegule side.
Right.
So waste is actually becoming the if you call it the binding constraint. It's becoming the denominator, that connects with anything that you would desire. But aside from that, we're driving economic development from that, but we're also reducing, the effect of this waste on our land, on our planet, right? So we're reducing carbon emission, and that's our own way of doing that. But ultimately, there is bigger, bigger dimensions of profits, in the area of
because school fees, is not cheap right now, and I'd love to use waste to pay my children's school fees. That'll be quite incredible. Let me come to you now, Dr. Odunsi. So we have other partnerships there. This one with I think Access Bank is also part of this. So how are they complementing your work?
Fantastic. And I must commend Access Bank for the massive foresight in terms of positioning as a foremost player in the climate finance space. As project developers or as green project developers, I think one of the biggest problems, as you alluded to earlier, is access to finance, and especially de-risking the finance that needs to come into that space. We find that we interact with a lot of nano, small, micro, medium-scale businesses who may not have the sort of cash flows and balance sheets, that can drive that massive inflow of finance. So working together with the Office of Climate Change and Circular Economy under the Economy Business Network, we are pushing together with a couple of other partners, bankability trainings, to make sure that these entities, no matter their size, they can represent themselves in that carbon market, because really and truly it's a bit different from the commercial landscape and the linear economy landscape that most people have been used to. It is truly a bottom-up dependent system, especially in the global south like Nigeria. So Access Bank has first and foremost reached down into that economic sector, not looking for the high balance sheets and all whatnot, and creating relevant instruments. So there's a green bond that sits within the bank now that we're looking to direct through structured loans towards these companies to help improve their capacity to scale. And what you find is we like to build out multiple pockets of revenue. Right now in the linear economy space, you probably get money by just trading your goods or trading your services. But within the green context, you do understand that a business being green compliant means that it is more attractive to a larger pool of funders today, under the EESG framework, which is an economic, environmental, social governance framework. Also, a lot of these funders are looking for green returns. They want to showcase that they are spending their money green, and reducing climate impact by how they spend as well. So having a structured banking partner, like Access Bank taking the charge there, makes it easier for us project developers to just focus on what we're good at, develop the best possible projects, engage as many of these nano, small, medium-scale businesses as possible, and create that sort of green ecosystem that really will be the lifeblood.
Right, and I want to believe other financial services companies too will also keen to this for sure. But, to coast it home now, we've had COP29. We're going into 2025. What are you seeing coming?
A larger level of awareness. A lot of the partners that we're talking to are very interested in driving the knowledgeability, and we believe that the bedrock of that sits within the EESG framework. Knowing that each ministry, each sector, each financial institution, each FMCG have a potential ability to benefit by effectively evaluating their performance within the structure of their economic, their environmental, their social, and their governance impact. And if they're able to deliberately and intentionally capture the data around this, then we will be better off for it in every aspect of our lives. So we've started to look at ways that we're going to drive the knowledge, the education of it. We're going to be leveraging technology in a lot of ways. We're going to be developing a campaign plan, both inwardly and outwardly. The EBN network is a platform where we're going to be providing thought leadership in those areas so that all of our organizations, all of our private sectors begin to walk in the light of the EESG. With the public sector, we're beginning to look into the various sectors, the various ministries. It's very strategic that the Office of Climate Change and Circular Economy is seated within the Ministry of Economic Planning and Budget. So we can begin to look at cost functions, from the angle of EESG, and that can also contain the deliverables, the expenditure, the budgetary allocations, within all of these ministries, and they can begin to see how they can touch on the sustainability nodes in their expenditure, and they can be more deliberate about it.
Right. I guess so much to look out for there, but it was great having you both, and I guess we're looking forward to COP30.
Oh yes,
at some
it's
point.
in Brazil.
Well, thank you so much, Mrs. Titulayo Osho, the Special Advisor, Climate Change and Circular Economy for Lagos State, and Dr. Adebola Odunsi, CEO, Carbonivity. Thank you both for coming.
Thank you
for having us.
All right, we'll take a break now. When we come back, we head straight to the markets. How's the Thanksgiving trade going for most markets that are open right now, the local bourse? That's in a moment. Just stay with us. Welcome back. Let's head straight to the markets now. We'll have Anete to give us the details of what's playing out. So Anete, for most markets, they're having the Thanksgiving trade, even though U.S. markets are closed. Then tomorrow, we'll have the Black Friday trade, and I wonder what's going to happen next.
Well, Black Friday trade for the U.S. is expected to be a thin trade. So far for the U.S., we saw that ahead of the Thanksgiving holiday, which Wall Street is closed for that very spectacular holiday. U.S. always looks out for that holiday. We saw that trading on Wall Street was about a fifth lower than the normal typical day transaction would be.
Right.
And then, of course, at the same time, the stock U.S. markets, they closed in the red yesterday. So, and they were all anticipating that the PCE would come in slightly higher, and then of course it was also in line with expectations. So for tomorrow, Friday's trading session, we expect that Wall Street
definitely looking forward to it.
It's going to be thin, but the close is what we do not know. But it will be a thin trading holiday. But let's talk about markets on the African continent. Always starting first with Nigeria's stock market, which has made some rebound. Yesterday we saw the market pull back by about 0.35%, and then also losing more than 208 billion naira. In contrast to what it gained on Tuesday, which was about a little above 8 billion naira. But we saw that market closing Wednesday in the red, but then making some pickups due to some bargain hunting on the exchange by some of the investors who are cherry picking on some stocks. We saw mixed trading yesterday on the market, and then at the same time we also saw that the volume of trades yesterday it had increased by about 45.8% to 805.1 million units. But at the moment, as we speak, we still see that that continuing activity is also oscillating, going back and forth. But of course, we look out for how that market closes at 2:30 Nigerian time. For the Johannesburg Stock Exchange All-Share Index, 0.63% is what it came at for intraday. While we saw that Johannesburg Stock Exchange 0.15% at intraday. 84,900 is trying to make its way back into the 85,000 level, which it had lost. So that market is still going back and forth and has been able to come all the way from 81,000, which it had dropped to at some point, and still trying to make that comeback. Now, for the other two markets that we're looking at, EGX 30 almost 0.30% down at intraday, and also just dropped below the 30,000 level, which it had hit, and at about 29,766.73. While for the Nairobi Stock Exchange, we saw the markets for the close of Wednesday's trading session 0.3% for the close of Wednesday's trading session. Okay, so now let's take a look at that. Yesterday we were talking about the fixed income market, but this time we're looking at the equities market response to Tuesday's announcement of a further rate hike, which was from the last MPC meeting for 2024. We saw the interest rate hike at an all-time high, and that's one of the world's highest interest rate. That's for Nigeria, 27.5%. After that, 0.25%, or about 25 basis points interest rate hike. So now let's talk more about that, the impact how it's having on the local bourse. And we have Orelua Odetunde, research analyst with Ancora Asset Management, to tell us more about this. Thank you for joining us, Orelua.
Yeah, thank you for having me. Good afternoon.
Okay. So now I know that the banking sector is always the most sensitive to interest rate hike, but tell us more about this impact. Which sectors were also affected by the interest rate hike and why?
Yeah, thank you for that. I think it's important to first look at the pace of tightening that we've seen this year, and the last increase that we saw on Tuesday, like you earlier mentioned. So if you look at it, the pace of tightening has actually slowed. I mean, I think all through the year we saw a 4% hike, a 2% hike, but on Tuesday we saw a 0.25% hike. So I think it just goes to show that, the aggressive tightening cycle that we've seen has started to slow. And that, some of the comments made by the central bank governor of a return back to orthodox policies. I think we saw the fixed income markets, prior to the time we saw that hike happen, we saw that at the Treasury bill auction, private market auction, and the bond auction, we also saw that, marginal rates actually increased in the bonds market by, about a record number to 22%. Then we also looked at the Treasury bill private market auction, where there was a 50 basis point increase in the 1-year Treasury bill instrument. So I think that hike was just done to complement that increase that we saw in Treasury bill and bond auction yields. So not necessarily that it was trying to, maybe signal for that tightening. And, going forward, we kind of expect that, 2025, we might start to see a pause or a moderation in yields. But I mean, if you now take a look back at the equity market, I think reaction was largely muted. I think what we saw was, a bit of positive reaction for the financial services sector, particularly the banks, as well as the insurance sector. More on the insurance sector, actually. A lot of them have, significant exposures to fixed income instruments, and where yields are priced, it improves profitability for these firms. If you also look at the banks as well, we didn't see so much reactions also, but slightly positive. I think on the negative side was when on the flip side was when we looked at the consumer goods sector and the industrial goods sector. It was also largely muted, but we did see, a bit of sell-offs on, big or mid-cap stocks like Nigerian breweries, which is a brewery player. I think the stock was down about 6%, and on a year-to-date basis, I think the stock has been down close to 20%. And I think it just goes to show, the impact, the fact that, this kind of companies will continue to incur higher finance costs, which will continue to affect their profitability, and at the same time affect the ability to maintain a dividend-paying culture in 2025. So I think we saw reactions to, negative reactions to the consumer goods and industrial goods sector, but a bit positive to the financial services sector.
Quite interesting. Okay, so now you've talked much about the fixed income market. So my next question is, has there been a shift of investors within the equities market into the fixed income securities?
So I'll say not really. If you take a look at where inflation was at the last print, I think it was close to about 34%. And then you look at where bond yields are at, an average of around 19 to 20%. Then you also look at treasury bills on an average of around 24 to 25%. You'll still see that there's a negative real return gap for investors. And given the very high inflationary environment that we faced in 2024, investors definitely need to invest in instruments that can earn higher than where inflation is currently at. So we're seeing investors starting to increase their risk appetite and play more in the equity market. On a year-to-date basis, the market is up about 30%, and in some significant stocks we've seen over 100 or 200% capital appreciation in them. So look at it vis-a-vis inflationary pressures, you still see that the equity market still is a good play for a lot of investors. So I don't think we're seeing that shift. And if you also look at the foreign portfolio investors report that we saw released by the HGX, you'd also see that 90% of the volume of transactions is being controlled by domestic investors. So we're still seeing a play by a lot of investors in the equity markets.
Quite interesting. So I think, Aurelua, so we'll leave it there and then look out for how the last two trading sessions of November would end. Well, starting with today, just a couple of, about less than an hour from now, and then look out for how Friday would also end for the market. Thank you so much for your time on our show.
Thank you for having me.
That was Aurelua Odetunde, research analyst at Ankoria Asset Management, giving us details about the fixed income, the equities market response to the interest rate hike. Okay, so from Africa, we move to the Middle East as usual, which is always our next stop point. Tadawul, okay, now let's talk about the Tadawul first. Tadawul was up by 0.38%. That's for the Saudi Arabia stock market, while the Qatari Stock Exchange was up by 0.54%. If we could talk about the United Arab Emirates markets, where we have the Dubai. Okay, so all the markets were in the green except for the Abu Dhabi index, which was down by 0.16% at intraday, while the Dubai was up by more than half of a percent at intraday. This market, like I always used to mention, this market numbers normally would change, so we'll look out for how they will close for Thursday, which is when the time when most of the Middle East markets would close for the week. And then we make our next stop to what we were mentioning earlier, United States markets. Markets on Wall Street, they're closed for Thursday, but this is the close for Wednesday's trading session, where we see market futures, they were in the red actually, but this is what the numbers turned out. We also saw that for the market, speaking about the market, we saw the personal consumption expenditures price index, or what you call the PCE, which is a gauge, the primary gauge used by the US Fed to gauge inflation. And of course, the next week, the US will be holding its final rate decision meeting, which they expected to cut the interest rate further by about 0.25%. But for the close of Wednesday, we saw that the market was all in the green, 0.08% for the Nasdaq, for the Dow Jones Industrial Average, S&P 500 0.14%, and the Nasdaq futures 0.23%. This was as the tech giant Nvidia had released. It came out with some it lost more than 1%. As well, we also saw earnings reports from Dell and HP and some other tech giants, which also dented some of the market performance for the close of Wednesday's trading session. But for tomorrow, the market will reopen for a holiday-themed trading, and the market will be looking out for Cyber Monday, which is coming up next week. And finally, we make our final stop for the Asian markets, where we see the market, for the South Korea, we saw that South Korea's central bank had cut the interest rate further by 0.25%. So the market closed in the green. Nikkei 225 also in the green, 0.56%. The Hang Seng for Hong Kong was down by 1.20%. For the other two markets, Shanghai and the Nifty 50 were also in the red for the close of Thursday's trading session. So, Ladi, that's the close for the markets.
Yeah, so definitely all eyes on the Black Friday sale. How's it going to look? Is it going to be sell-offs or maybe buy interest? We'll definitely find out. Thank you so much.
Ladi, I think you should have a crystal ball too.
Crystal ball.
Yes.
All right, I'll get that out at some point. Thank you so much, Anita, there for giving us most of those details now. All right, let's take it on to Berlin now. That's in Europe. We see automaker Volkswagen has now had divested from a factory that it operated in the Xinjiang province, together with Chinese state-owned company SAIC Motors Corporation. The buyer of this plant is also a state-owned auto company. What's behind Volkswagen new plan now? Let's bring in Vada Emrach there. Great to have you, Vada. So this factory opened not even 10 years ago. What led to Volkswagen? What's led them to this point?
Thanks for having me on. Well, Ladi, the location of this plant was always quite controversial. It was set up in the Xinjiang Autonomous Territory in the northwest region of China. This province is known for its lush scenery and mountains, but it's also home to many ethnic groups, including the Uyghur people, who are predominantly Muslim and are detained in that region, sometimes in re-education camps and often forced into labor. Now, because of this, the plant had an odd reputation because it violated a lot of Germany's own supply chain laws. VW co-owned this plant with SAIC Motors. And over the years, Volkswagen defended this plant and said said no human rights abuses were happening in the factory itself. But it still faced a lot of backlash for this decision. The recent announcement was sparked by economic concerns. That's what the company says. The plant has the capacity to push out 50,000 cars annually, but not a single one has been produced since the year 2019. And the German state of Lower Saxony, which is VW's second largest shareholder, said it was quite happy with the decision.
And how does this reflect on VW's presence in China?
That's a good question. Volkswagen is in a lot of partnerships and collaborations in China. This joint-owned venture, which was a factory, was proof of this close cooperation. And as the announcement came to shut the plant, VW also announced it was extending its partnership with the company SAIC Motors by a decade to the year 2040. Even though the Xinjiang plant was making losses and jobs were being cut, the partnership between these two companies flourished. However, this comes at a tricky time, as just last month, the European Union levied hefty import duties on Chinese-made EVs, which Germany opposed. The Chinese market and the innovation there is extremely important for Germany, and this deepening partnership shows that. VW and SAIC now plan to deliver 18 new models by the year 2030, including 2 special models just for Chinese consumers. And just by the way, SAIC isn't the only one. Volkswagen is in similar close cooperations with state-owned company FAW Motors, JAC Auto Group, and an EV-only company called XPeng.
All right, what are investors looking at in the market today?
Well, investors here are definitely paying attention to Christine Lagarde, chief of the European Central Bank, and what she said to the Financial Times. She said that a trade war is in nobody's interest and would lead to, quote, a global reduction of GDP. She even questioned Donald Trump's approach and said, quote, how do you make America great again if global demand is falling? There's also some unrest in France, where government bonds held steady today after the market had a moment of calm after yesterday's sell-off drove the risk premium high. The European markets continue to be rattled by U.S. announcements of tariffs. There's a lot of fear in investors here that the next announcement from the president-elect in the U.S. will target the European Union directly. Investors are keeping a close eye on France as the government fights to get the proposed budget approved. But there are concerns of a collapsing government, which would be following Germany's footsteps and would create further unrest in the economic heart of Europe.
Van, I've given us this was what's playing out right there. Thank you so much. All right, let's get a check of what's happening with the commodities market now. We're going to be looking at the price of cocoa. See Nigeria's top agricultural exports at this time. That peaked at $12,000 per ton. That was April 2024, 300% higher than its 2022 levels. And we see total cocoa output, that's for Nigeria, that has stagnated at approximately 270,000 tons. Well, joining us now is Osuji Chidebere, analyst with Financial Derivatives Company. Great to have you.
Thank you very much.
So talk to me about this price drop we're seeing. What factors are responsible for it, and also for the low output we see from Nigeria?
So for the price drop, there was a correction earlier, okay? And what happened was that when the dry season affected the major producers like Ivory Coast and Ghana, you see, it led to a supply shortage in the market, and that drove up the prices. But now you look at them, getting rainfall and all of that, and some interventions in Ghana for the, seed diseases that came up. And all these things, kind of brought a little bit more supply into the market. So it's kind of corrected it. But then again, in November, it's increasing. And this is because there have been issues with, flood in Ivory Coast, water flooding the fields because of this rainfall has gone from just being, a blessing to being heavy rainfall and causing flood. So it's affecting the commodity supply and therefore again increasing the price because lower supply, and prices go up. And as for your second question on Nigeria's response to this, well, you would think that with the price increase, it incentivizes farmers and growers to produce more And actually, we've tried to increase production by 15%, right? But the thing is, when you look at the value chain, right, farmers are at the beginning, right? And then you have middlemen, then you have exporters. So as much as the price increase is going up, and people are expecting, oh, it's going to lead to more investment and more production of cocoa in Nigeria. But what happens is that, they don't earn as much as we perceive that they earn compared to, export prices. And, it's a matter of investment. And when you ask, okay, who is going to invest? Either farmers or new investors, right? But they have to invest in the farms. You look at things like mechanized farming in the US. I mean, if you look at the way they farm corn, a lot of, machines involved. And, some of those things really, with investment is going to really increase production. But then again, they need investments, and they also need maybe better financing options. Again, for the farmers or, investors coming in to invest, that will increase production.
And how's this playing into the chocolate market?
All right, so with the chocolate market, you have, chocolate makers who had anticipated, further price corrections. And what happened was that they used much of their inventory, anticipating that prices are going to go lower. But as it will be, like I said, the rainfall in Ivory Coast, and, just the other places, the major producers of cocoa, there was, again, with the flood, another shortage, and, expectations that, supply is going to reduce, so price is going to go up. And then, again, the markets, reflected that prices went up. And so with the chocolate makers, having used up much of their inventory, right, they stand in that situation that they're looking for, cocoa now at a better price, but the price is up right now.
All right, we'll definitely keep tracking those prices, but thank you so much. That was Osuji Chidebere, analyst, Financial Derivatives Company. Thank you so much.
Thank you very much for having me.
All right, now let's get a check on what's playing out for the crypto market. Now, if you look at the screen, it's, dip green at some parts there, talking about Coin 360. Bitcoin, they're holding about 2.08%, and a few pockets of red in the market. But yeah, it's majorly green, and everyone's looking forward to that Black Friday trade. What's it going to be like? All right, let's look at the top stories now in the crypto market. We see Nigeria Securities and Exchange Commission, they're cautioning investors against cryptocurrency scams. The Securities and Exchange Commission has cautioned investors and the general public against engaging with Merino FX Limited, which is falsely claiming to be a SEC licensed cryptocurrency exchange. In a statement released yesterday on the Commission's website, the regulator clarified that Merino FX Limited is neither registered nor licensed by the SEC to operate in the Nigerian capital market in any capacity, including cryptocurrency exchange services. Then we see OKX, they're launching an exchange and Web3 wallet in Belgium. That's the leading global cryptocurrency exchange and Web3 tech company. They announced the official launch of OKX Exchange and OKX Wallet in Belgium. And Belgian customers can now access spot trading and convert services for over 200 cryptocurrencies, including more than 60 crypto euro pairs. So those are the top headlines there for the crypto market. Let's bring in Olumide Adesosun, our financial market analyst. Hello, Olumide.
Happy Thanksgiving.
Happy Thanksgiving, Olumide. And definitely, I'm sure traders are going through the Thanksgiving trade right now, expecting the Black Friday trade tomorrow.
Most definitely. The market is quiet, holidays and a lot of traveling in the world's most powerful economy. We're seeing Bitcoin oscillating between 94,000 to 97,000 yesterday, after dropping as low as 92,000 in the aftermath of Trump's victory. What we are seeing in this space is that we are seeing consolidation around Bitcoin's key support. Don't forget that MicroStrategy made its biggest Bitcoin buy, 5 billion worth of Bitcoin, and the price was quoted at 97,000. So a lot of analysts are looking at that price and seeing when to gauge in their position. However, we've seen interesting upsides in Solana XRP. Solana hit its record high some days ago. XRP, after dropping around the 1.2 support line, we're seeing going back above the 1.4. Interestingly, because a lot of traders and investors are betting that these assets will get more exposure. And interestingly, Ladi, Dogecoin opening in Sweden, stock exchange, traditional investors have exposure in form of exchange rate funds. That's interesting. So we're seeing those things moving the space, but it's still too early to say if Bitcoin will definitely hit $100,000 before the end of this week.
All right, we'll definitely watch out for that. Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you for having me. Yeah.
And Nigeria's President Bola Tinubu is on a 3-day visit to France, marking the first visit of its kind by a Nigerian leader in over 20 years, as Paris looks to strengthen its relations with English-speaking Africa. We have Juliana. She's there in Paris right now. Great to have you, Juliana. So what kind of partnership should we be expecting from this visit?
Good afternoon, Laddie. Well, I've actually just arrived in Paris just a couple of hours ago, and already, as you can see from the pictures which have been put out by the State House, the president is currently at the Elysee Palace with President Emmanuel Macron and members of the delegation for the start of this 3-day state visit, which is a really important state visit, not just for Nigeria, of course, who are trying to tap into the economic prosperity of France, but also for Emmanuel Macron, because we know over the past couple of years, it's fair to say that relations have been strained in Francophone Africa, particularly around the Sahel region. So this is a really important visit for France. And I think it goes back to when we were here last summer. You'll remember that really kind of big, gustful meeting between the two. It does appear as if there is a mutually beneficial friendship and relationship blossoming between French President Emmanuel Macron and Bola Ahmed Tinubu. So certainly we're going to expect a deepening of those ties there. Tomorrow, I think, is really going to be the big one, where the Franco-Nigeria Business Council hold their roundtable. I know there are going to be discussions about investments in technology, in agriculture, in mining, and cultural exchanges and cultural ties. Again, I think for Emmanuel Macron's legacy, it's important to have, Africa's largest economy, Nigeria being the largest oil producer, on side. And Sub-Saharan Africa, Nigeria is France's leading trading partner. So certainly around trade, technology, agriculture, mining, and investment, we are going to expect plenty of discussions on that.
Right, definitely. I will get more updates from you tomorrow. Quite interesting seeing the president with his trademark hat right there in France. Thank you so much, Juliana. All right, so that's the show today, and that's how most markets we track are looking. All eyes for the Black Friday trade. That's tomorrow. We'll see how it plays out. Thank you so much for watching. I'm Laddie Williams, and from me and the team right here at Channels HQ's. Bye for now. See you tomorrow. Bye-bye.